Hi everyone, welcome back to Corporate Decoder, the place where we try to figure out what companies are really up to. Today we're diving into a filing that involves a loan, a related party, and enough corporate connections to make your head spin. It's like a family business but with millions of dollars and SEC regulations. Get ready for some interesting twists. We're looking at a report about an agreement, a legal deal that Cenntro Inc. made. It all centers around money. Zhongkai Holding, which we'll call Zhongkai Hong Kong because that is where they're located, is lending Cenntro Inc. some money. Cenntro Hong Kong is part of a bigger company called Greenland Technologies. Cenntro is borrowing the money and will have to give back the loan with interest on a specific date. Let's get into the specifics. Cenntro can borrow up to $1 million. They signed a promissory note, basically a fancy IOU to Zhongkai Hong Kong, agreeing to pay back the money. Cenntro plans to use this $1 million for what's called working capital. That means they'll use it to pay for day-to-day operations like salaries, rent, and buying materials to make their products. This promissory note, this IOU, is due on April 14, 2026. So Cenntro has about a year to pay it back. And they're not just paying back the $1 million, they also have to pay interest. The interest rate is 750% per year. That means for every $100 borrowed, Cenntro will pay $7.50 in interest each year. So on $1 million, that's $75,000 in interest per year. There's a catch here called a default. If Cenntro fails to pay the money back on time, or if they break any other rules in the loan agreement, they are in default. If that happens, Zhongkai Hong Kong, the lender, can demand that Cenntro pay back all the money immediately, plus all the interest and other amounts owed. Alternatively, Zhongkai Hong Kong can demand the debt converted into shares of Cenntro stock. The loan agreement has standard promises from Cenntro that are expected in this kind of deal. These are the company stating the loan will be used appropriately and they have the ability to pay back the money. Now here's where things get interesting, the related party aspect. It turns out there is a connection between Cenntro and Greenland Technologies. Mr. Peter Wang is the boss, the chief executive officer and chairman of Cenntro. He's also a director and chairman of Greenland Technologies. He also owns a lot of Greenland Technologies, stock close to half, which means he has a big say in what that company does. Because of this relationship, the loan agreement between Cenntro and Zhongkai Hong Kong, which is an indirect part of Greenland Technologies, is what's called a related party transaction. This means that because the same person is involved in both companies, there's a potential for things to not be entirely fair. To make sure everything is above board, the deal was reviewed and approved by Cenntro's audit committee. This committee is made up of independent directors, people who aren't involved in the day-to-day management of the company and don't have a personal interest in the loan. These independent directors are meant to look out for the interests of the company and its shareholders to make sure that the loan is a good deal for Cenntro. Mr. Peter Wang didn't have anything to do with deciding about the loan because his son, Mr. Raymond Wang, is in charge of Greenland Technologies. To summarize, Cenntro needed $1 million for its daily business. Instead of going to a bank, it got the money from another company, Greenland Technologies, that has close ties to it. Independent directors looked over the deal to make sure it was fair. Now, what does all this mean? Cenntro got $1 million to run its business, which is good. The interest rate, 7.5%. Isn't terrible, but it's not super cheap either. Getting the money from a related party can be a good thing because it can be quicker and easier than getting a loan from a bank. But it also means there's a risk that the deal might not be as good as it would be if Cenntro had shopped around for other lenders. The independent directors are there to prevent that, but it's still something to keep in mind. Overall, this loan seems like a pretty standard transaction. Cenntro needed money, it got it from a related company, and independent directors signed off on it. There's nothing here that screams red flag, but it's always good to be aware of these kinds of related party deals. Thanks for watching. If you enjoyed, please subscribe, like, and comment.